Some companies rise, some fall, and then there are the rare few that come back even stronger. MicroStrategy, an American business intelligence company, is one of them. From dominating the software industry to nearly collapsing under the financial scandal. But instead of fading into history, it made one of the most impressive corporate comebacks. Today, it's valued at billions and is one of the major names in the tech world. So, what led to its near downfall? How did it turn things around? And what makes MicroStrategy one of the most interesting companies in the industry today? Stick around, because we're about to take you through its history, growth, and some inspiring facts you probably did not know. First off, let us take a step back and start with the basics. What exactly is MicroStrategy? Well, for starters, it is a tool that helps businesses make smarter decisions by turning raw data into meaningful insights. In other words, MicroStrategy is a business intelligence (BI) and analytics platform that lets companies explore their data, spot trends, and predict future outcomes. Whether it is for big companies or smaller teams, MicroStrategy provides the tools to make sense of massive amounts of information and make better decisions. The program is filled with interactive elements such as dashboards, data visualizations that tell stories, and reports that go beyond just numbers. It connects to all sorts of data sources, databases, cloud storage, and even spreadsheets. And the best part? You do not need to be a coding expert to use it. With tools like Intelligent Cubes, you can generate reports and dashboards without knowing a single line of SQL. How does it work, you ask? Well, it all starts with its architecture. There is the intelligence server, which makes sure everything runs smoothly, handling user requests and managing data security. Then, the analytics engine does the heavy lifting, crunching numbers and creating visuals that give businesses a clear view of their data. And with mobile and cloud features, the power of MicroStrategy is right at your fingertips, anytime, anywhere. But just like every other venture, MicroStrategy also grew up from humble beginnings. In the late 1980s, a young Michael Saylor was on the verge of an exciting career in aerospace engineering. Fresh out of MIT, he had dreams of working on high-tech simulations for fighter jets and spacecraft. But fate had other plans. The US economy took a downturn, and his job prospects vanished overnight. Instead of panicking, Saylor did what any ambitious entrepreneur would do. He adapted. Alongside his college friend Sanju Bansal, Saylor saw an opportunity in a promising field: data analytics. Companies were generating massive amounts of information but had no efficient way to process it. And so Saylor thought, what if there was a system that could turn raw data into powerful business insights? With this idea, the two founded MicroStrategy in 1989, and they did not have a flashy office or millions in funding. All they had was a vision and a $250,000 contract from DuPont. Their mission was simple: to build software that could help businesses make smarter decisions using data. MicroStrategy spent the 1990s perfecting its business intelligence software. Their technology allowed companies to track sales, customer behavior, and market trends like never before. Soon, Fortune 500 companies, government agencies, and retailers lined up to use their software. The company's success was meteoric. In 1998, MicroStrategy went public on NASDAQ under MSTR, and its stock price saw unexpected highs. By the end of the decade, Saylor was a billionaire, and MicroStrategy was now competing against big names of tech like IBM and Oracle. But then, disaster struck. In March 2000, just as the dot-com bubble was beginning to burst, MicroStrategy faced an accounting scandal. The company had overstated its revenues, and when the truth came out, its stock fell by 62% in a single day. Yes, you heard that right. Within no more than 24 hours, MicroStrategy lost $11 billion in market value, and Saylor's fortune evaporated overnight. Most CEOs would have walked away, but Saylor? He stayed. Instead of giving up, MicroStrategy doubled down on what it did best: Enterprise analytics. Saylor focused on refining the company's software, expanding into cloud services, and rebuilding trust with clients. For 2 decades, MicroStrategy remained a leader in business intelligence, working with some of the biggest names in finance, healthcare, and retail. The company wasn't flashy, but it was rock solid. Then, in 2020, Saylor made another bold move, one that would change MicroStrategy forever. But before Bitcoin, MicroStrategy had already proven one thing: it was built to survive. By 2020, MicroStrategy had established itself as a leader in business intelligence software. But a new challenge was about to hit, and that was the economic uncertainty. The COVID-19 pandemic triggered multiple unexpected stimulus measures, leading to concerns over inflation and the declining purchasing power of fiat currency. For Michael Saylor, the company's co-founder and CEO, this was not just a temporary crisis, it was a serious trend. A trend that may have pushed MicroStrategy into yet another downfall. MicroStrategy had $500 million in cash reserves, but leaving it in traditional bank accounts was no longer a safe option. With interest rates dropping historically, those reserves were not generating meaningful returns. Worse, the Federal Reserve's aggressive money printing meant that each dollar was losing value over time. Saylor realized that holding cash was like sitting on a melting ice cube, and that it was only a matter of time before it became worthless. That's when he made a radical decision. Instead of keeping MicroStrategy's reserves in US dollars, he would convert a massive portion into Bitcoin, a digital asset he believed was the best hedge against inflation. In August 2020, MicroStrategy made its first Bitcoin purchase, $250 million worth of BTC. This was not just an ordinary investment, but a corporate strategy shift. MicroStrategy became the first publicly traded company to adopt Bitcoin as its primary treasury reserve asset. Just a month later, in September 2020, MicroStrategy doubled down on its conviction, purchasing an additional $157 million worth of Bitcoin. The company was now not just holding digital assets, but basing its whole financial strategy around Bitcoin. Saylor saw an opportunity that few corporate leaders had fully grasped. Bitcoin was not just another speculative asset, it was a new form of digital gold. By December 2020, it was clear that MicroStrategy's Bitcoin strategy was not a one-time event. The company took an even bolder step by raising funds through convertible notes, a type of debt that could later be converted into stock. This allowed them to secure an additional $650 million, all of which went straight into purchasing more Bitcoin. At this point, MicroStrategy's Bitcoin holdings had become one of the company's defining characteristics, drawing attention from both investors and the corporate world. Then, in February 2021, MicroStrategy shocked the financial world again. With an even bigger bet, the company raised another $1 billion to buy more Bitcoin, creating its mark as the largest corporate holder of BTC. By now, it was clear that this was not a temporary strategy. By 2024, MicroStrategy had over 190,000 Bitcoin. No other publicly traded company owned more Bitcoin. The company was no longer just a software firm. It had grown into a hybrid entity, a tech company, and a Bitcoin holding firm. This move gained massive interest from institutional investors. Some saw it as a genius move, while others viewed it as reckless. But one thing was sure, MicroStrategy had made history. MicroStrategy's value today is heavily dependent on Bitcoin. As of January 2025, the company's stock is trading at around $340 per share and showing promising growth. This increase is part of a larger trend that has seen MicroStrategy's market value reach an impressive $83 billion. Much of this spike is thanks to the growing value of Bitcoin. However, this Bitcoin-based strategy has also attracted different predictions about the company's monetary future. Mizuho analyst Dan Delev sees a 53% upside for the company, predicting the stock could hit $515 per share. He also credits MicroStrategy's aggressive Bitcoin buying strategy for this positive outlook. While some question Bitcoin's long-term value, Delev believes global interest and favorable political conditions could help keep it strong. But with great risk comes potential challenges. New tax laws, like the 2022 Inflation Reduction Act, could cause issues for companies like MicroStrategy that have big unrealized gains from Bitcoin. This means the company could face higher tax bills if Bitcoin's value continues to rise. To handle these challenges, MicroStrategy is working on new financial strategies, including offering $250 million in convertible preferred securities to attract fresh investments. In short, MicroStrategy's current value is the result of its decision to put big money into Bitcoin. While this move has paid off so far, it also means the company has to get through new risks and financial challenges in a rapidly changing world. And that is the story of MicroStrategy, a company that reinvented itself when it seemed like the world was against it. If this story inspired you or got you thinking about the future of tech, give us a like, subscribe for more, and leave a comment with your thoughts. What do you think about MicroStrategy's comeback? We would love to hear from you. Catch you in the next one.